Hello everyone, this is a Bitcoin macro analysis. As I mentioned a couple of days ago, we'll wait for the monthly close because this was the monthly close, quarterly close, and the bi-yearly close, which are a very high time frames to look at, and will give us a better picture on what we're looking to see in the coming months and maybe years to come. Sorry, I don't have my cam on because my naughty parrot just bite my cam and broke it. I will order a new one. So you're not gonna see my face in the corner. So we'll focus on the charts. So what I will be going through, I have them here on my list. What I will be going through, I'll be going through for sure Bitcoin on the macro levels. I'm not gonna go through the low time frames, just the macro time frames. We're gonna look at what I looked at last month. So last month we made the cycle analysis, and we're gonna see how it's playing, what we're looking for a bottom. We're gonna go through some indicators just to help us to kind of have a picture when we know a bottom is in. I'm gonna go through why this cycle analysis or why this bear market for Bitcoin is different than all the rest. It may play out the same, it may not, but now we have a macro difference, which for sure is the inflation and the stock market dump and the interest rate. We're gonna go through also briefly about the stock market, even I'm not a financial expert on the financial markets or economical expert, but I look at the charts, so I will look at the inflation charts and the interest rate chart. So that's it. Let's start first of all to tell you what I'm be looking at. So this is the 6-month chart on Bitcoin. It doesn't have a lot of candles because on the big asset picture, this is a new asset. So there's not a lot of candles on the 6 months. So we can't do a lot of analysis on the 6-month candles. But this is good to see on the logarithmic chart. Another thing I'll be using now is I will not use the normal the candlestick. I will use the Heikin-Ashi, because the Heikin-Ashi is a simple average bar. So each bar opens on the previous average, and that's help you see the trend much easier, because it kind of smooth all the noise. It remove all the noise and just make the trend much easier for you to see. So to look at the trend, you can look at the line chart, or what I use, which is the Heikin-Ashi, to see the trend much better. I'll give you another example. Let's go to the monthly chart on Bitcoin, and let's go to the candlestick. So that's the monthly chart on Bitcoin. You see some green months. Oh, this was, but if I go to the Heikin-Ashi, this was a complete downtrend. Yes, we had here a candle, which is in the Heikin-Ashi. This is a kind of a reversal alert candle, that after this candle, if we had a green open up, then this might be a reversal, like what we see here. So this was a candle, and then this is the reversal candle, which didn't happen here. And what we had is a complete downtrend. So that's what I'll be using, the Heikin-Ashi, just to smooth the noise and make us see the trend much easier. So first of all, I want to go through what I was talking about last time, which is here. I'm gonna play just 1 minute from the previous video just to see what I'm talking about. Based on the analysis, the low will come in between somewhere July, August up to October, and it will be somewhere between 12,400 up to 15,000. I like this level here. I like this level. If everyone is looking at the all-time high, I like Bitcoin to go down to this support and bounce from this support. And that makes sense on the technical analysis with the price target that we got. So what we were saying when the price was around 30 or something like that, that this is as per the cycle analysis, which I'll put a link in the description. You can go watch the video again. It's very important to see the cycle analysis. We're looking at low to be in somewhere between August and September, and can go down up to 12,000, maybe week lower. So this is based on the previous cycle analysis. So this is it. Based on the previous cycle analysis, that's what we have. And it seems so far it's playing good. But just, I have to clear this again. It doesn't mean that we're going to see this happening tomorrow. Bitcoin can simply range here or have another push to maybe 30,000 and then dump. So I'm even expecting some kind of push up soon. So this we're talking months to come. We're not talking tomorrow or next week. So the levels we were looking at from the cycle analysis is somewhere between 12 to 14,000, which is good because there's a support here, and somewhere in the coming end of summer to have it. So this is the levels we're looking at, and so far it's playing out. So another important, this is the cycle analysis, which worked nicely with me here and worked nicely on the top. So what's the difference when I say this cycle and the bear market in this cycle is different than the others, simply because the macroeconomic is different. So how is that? Let's look at the S&P. So this is the S&P. This is the 6-month chart of the S&P. If you see on the 6-month chart of the S&P, it's the first time we get the Heikin Ashi red. It's still not confirmed because it's just started the 6-month. So I'll go to the 3 months just to make it easier. So if I go to the quarterly, we'll see we have this indecision candle and then the new candle opened lower. S&P has to trade above 4,200 just to turn this green, which is not likely in the coming 1-2 months. So when would we see something like that? We saw something like that in the recession in 2008. And notice that after that, we had some kind of pump up with the minor corrections happening. And this is the 3 months chart. So yes, if you go to the monthly chart, you'll see this is a 20% over the period of like half a year. Yes, true. But we're looking now macro. We're not looking at 3 months and 1 week. So Bitcoin inception was here. And since that, all the cycles Bitcoin was in was simply uptrend, strong uptrend on the stock market. Another point, let's go and look where the inflation was. So this is the inflation chart. And let's see 2007, 2000. This is the recession 2007, 2009. And the inflation, Bitcoin inception was around here. And since then, inflation was managed between 0% up to 4%. So never in Bitcoin history we had this inflation. Another interesting point, Bitcoin was supposed to be a hedge against inflation, and Bitcoin was still reacting as a super high risk on asset. Until it decouples from this idea that it's a risk on asset, it's not an a hedge against inflation. On the long term, years to come, yes, it's, in my opinion, it's an amazing asset to invest in. But this is why this cycle is different. This is the inflation. In all Bitcoin's history, all the previous cycles, inflation was managed nicely. Let's go and check the interest rate. This is the Fed interest rate. And this is the 2008, 2010. So since Bitcoin's inception, interest rate was in the lows. 2018, they peaked up the interest rate, then the stock market corrected a little bit, and then very fast, in like 2-3 weeks, they get back the interest rate low, and then the stock market continues up. So in this whole area as well, the interest rate was managed. And now we see the first time the interest rate is going up fast because they want to manage the inflation. So in all of this, the inflation was kind of low, under 4%. This is the first time that we see the inflation that high since the 2008 correction. So that's, in my opinion, make the entire Bitcoin history. So the entire Bitcoin history was in, so all the Bitcoin history was in a macroeconomics, which is kind of managed inflation under 4%, interest rate low. They spiked up in 2018, which was the top of Bitcoin, funnily enough, in 2018, when the rate went high to 2%, 2.5%, the stock market in 2018 made a small dump here. if I go, this is 2018. They increased the rate, the stock market dump, sorry, here, the stock market dump. They then increased the rate higher, lowered the rate, and once they lowered the rate, the stock market recovered, and that was also the Bitcoin top in that cycle, which was the all-time high of 2018. So this all-time high came on increasing in the interest rate, not very aggressively, and then 2 weeks, 3 weeks after that, they drop it down. That's in Trump's time, and that was the top on Bitcoin. So in general, all Bitcoin history was on a macroeconomic, which is low interest rate and managed inflation. This is the first time where Bitcoin is faced with a macroeconomics which is not clear. So far, it's not clear. Some people say, oh, okay, this is like the 2000 or 2008. I don't think so. And I can show you by the interest rate and by the inflation, but that this time is different, maybe closer to the 69, 74 time. I can do a separate video comparing these cycles, comparing the stock market, what happens, but that will take time. I don't want to involve it now. If you want that, please comment that on the video, and I can go through, because I have the analysis, I can go through what happened on all these cycles on the stock market. I think we're closer to this one, that if this is the case, then we're gonna see years of sideways. What I mean by sideways is stock market can go up 70%, then down 70%, but we're not gonna see these massive gains for years to come. That's in my opinion. It doesn't have to be right. Anyway, if you want me to go through the S&P and the stock market comparison with the inflation and the interest rate over the previous cycles, please comment that on the video. If I get a couple of comments that you want that, I'll make a video about this, because it will take me like a couple of hours to prepare that. Anyway, let's go back to Bitcoin. So that's the first point I want to clear. Yes, our cycle analysis give us a low around 12,000 in up to November, but also this is based on the previous cycle, and this time it's different. It doesn't mean this will not play out. I think this will play out, but just we have to be clear that macroeconomics is different. This is the first point I want to talk about. Second is what indicators I'm looking at to know that the bottom is in. First, let's look at the chart itself. And there's a couple of things which is, for me, they look nice. So let's take the peak of 2013 and the bear market 2013 to 2015. If we noticed here, we had the level around 355, which Bitcoin was going to, bouncing, and then eventually it break, capitulate. So capitulate lower. After the capitulation, it spent months kind of in a small range, which is accumulation. After accumulation, we had the push-up. Easy. We came to all-time high, put all-time high, here where the also interest rate went up. And then Bitcoin went down to this 6,000 level, back up, down to the 6,000, back up, down to the 6,000. I can go to the weekly just to make it more easier. If you see, to the 6,000 level, up, down to the 6,000, down to the 6,000. And I remember here very well, because I was in Bitcoin since here. I remember here very well that everyone, and I was one of them, oh, there's no way Bitcoin will break the 6,000. This was back then the cost of mining Bitcoin, and it will never go under this, it will never go under this. And I was from the people that will not go under this, and I was buying here, and then the price dumped, and I capitulated here. So the price then took this level down. What happened? Similar to what we were talking about here. The level broke down, accumulation for a couple of months, and then we get the expansion, then we had the virus, capitulation, then we had the full expansion. So same thing happened. What I'm trying to think about now is the same thing is happening here. So we had here the 300 level, here, the 300 something level, which was the bottom. It broke down, capitulated, then went up. Then we have here the 6,000 level. It was support, never gonna break, broke down, accumulated, went up. Then here we had the 28,828 level here, which was the range low. So the price went all-time high, went down here, bounced. So this for me was a scam bounce, took the all-time highs just to get everyone excited and dump. But at the end of the day, this was the high, down to this level, up, down to this level, up, down to this level, up until this level broke. So if you look at the last two points I'm talking about, it's kind of similar. Level, hold, break, accumulate, up. Level, hold, break, accumulate, up. Level, hold, break. So what I'm looking to be similar, that's what I'm looking at. Level broke, accumulate, up. If I look at that and I look at my cycle low analysis, it's kind of works nicely. So if this price go down, accumulate, then up. So that will be good. This because the bottom will be perfect timing with the previous cycle. The average drop will be perfect as previous cycle average drops. So if this played out, that would be very nice. That the price go down, accumulate, then go up. For sure up, not to all-time high, because so it will be something like that. If I have to, but this is pure speculation. Go down, accumulate, go up, then back down, then up, and here start, and then push to all-time high around this date. All-time high will be somewhere, maybe here. So that will be a good thing to see. Why is a good thing? Because it works out perfectly with the technical analysis. First, it's similar to the cycles. Second, we put the low on the time with the other cycles. And then third thing, this is a very good technical support here. So everything works perfectly from a technical analysis point of view. But I have to clear once again. Don't forget something, that this cycle might be different because the macro is different. That doesn't mean that things will not change. Sooner or later, the Feds will decide, oh, you know what? We crashed the economy so much that we need to chill a little bit, and then the markets will recover. So from technical, if this played out, would be very nice. So this is the first point, which is simply looking at the previous cycles lows, how it was put. It's kind of the same. Low, break, accumulate, up. Low, break, accumulate, up. And each low is everyone saying it will never break. It will never break. Broke, up. How many times you heard 28 will never break. 27 is the low. It will never go under that. 20 is the low. It will not get. Well, it goes under that. So this is the first point. Second point I want to look at, which I hear a lot people saying about the RSI. So they say, oh, Bitcoin RSI was never that low in history. It's oversold. Well, guess what? Luna was oversold at 20 and it went to zero. I'm not saying Bitcoin will go to zero, but the idea is the RSI is not the way to look at RSI. Yes, this is a much lower, and yes, this means that the bottom is closing in, but it doesn't mean that it can drop 30% and put a bottom. So you can't trade off this, but it's good to see. So for me, when I see this, I'll be like, oh, nice. This is getting to an area where it can bottom up soon. But I want to see divergence. I want to see divergences on the five days or something. What I mean by that, I want to see the RSI go down. Let's say Bitcoin at 14. The RSI went up, goes here, while Bitcoin is at 13, and this is bullish diversion. Then that's a good sign for me, that the RSI. So another point is, you can't look at RSI like that. If you want to trade from the RSI, then I'll advise you to look at it in a different way. It's not oversold or overbought. Think about it this way. This is the monthly chart. Here the RSI was the lowest it ever get. If you look very well here, So back then, here, this was the lowest RSI Bitcoin ever been, oversold. After that, Bitcoin dropped 45%. So it doesn't mean that this is oversold, that is definitely going higher. It's not oversold. It can always sell more. Again, Luna is a good example. So, but what happened here, if you want to see the RSI, you will see that after the accumulation, the RSI is starting to flatten and starting to put like a straight line, then peak up, then down, then it crossed the average, the moving average of the RSI, and that was, after that moving average on the monthly, we had the peak up. Same thing here. Above the moving average, we get the peak up. But anyway, this was too early. This is the 2014 bear market. And then here, Bitcoin went a little bit under this level. Oversold, oversold, oversold. Even oversold here, it can always, sorry, here it was oversold. It can drop 20% more. But after the RSI crossed the moving average, this was the low and it went higher. Yes, this was the black swan, so I kind of don't count it, but that's what happened. Again, this is very important. Put a high, RSI went under the moving average. Even we went to a new all-time high on the monthly, the RSI never crossed over the moving average. So the relative strength index, they never showed a bullish sign that this can go to 100K. So even here, it didn't happen. So what I would like to see, again, price, as I said, accumulate here. The RSI moved like this. The moving average comes like here, cross the moving average somewhere here, and then price go higher. And that will not happen before a year and a half. Again, I'm just speculating. I'm just putting scenarios out there. But just my main point is, if you want to look at the RSI to find a bottom, you can't say, oh, this is oversold. This is not how you see a bottom on RSI. How you see a bottom, okay, the RSI now is showing strength. The RSI moved above the moving average on the monthly. Okay, now I can say this was the bottom. Now I can say this was the bottom. But you can't trade off this. Why you can't trade off this? Because this is it's called lagging indicator. What means by that? The moment the RSI crossed the moving average, which for me, I identify, okay, this was the bottom. But look, the bottom was almost 75%. So we had a 75% bounce until, yes, this was okay, this was the bottom. Here, this monthly candle crossed this, and that means from the bottom to that candle around 80%. So here, why this is a lagging indicator, but I will use it to tell me this was the bottom. And that will be months after the bottom is in. But I don't mind that because I don't trade off this. I trade off other stuff. And when it comes to Bitcoin long term, I will tell you at the end how I will trade it. And I said it last time. It's just average buy. Anywhere it drops under 18, 19, I'll start buy up to 10,000 or something. So this is the idea. Another point you can do is simply wait a signal, which will be in this case 70% higher than the bottom. But guess what? Even if it was 70% higher than the bottom, you still win 7,000%. Yes, if you buy here at 5,000, this is, or here, yeah, 5,000, this is 70% above the bottom, but still you get 700%. So this is called play it safe. And I will explain at the end. So this is another indicator. I just wanted to clear the oversold, overbought, and explain how you can play the RSI and how you can look at the RSI. So the third point is, which I like a lot in also high time frame analysis, the stochastic oscillator, which is a momentum oscillator that shows you the momentum. And all of these are lagging indicators. Lagging means when the indicator flag is signal, it's already not on the highs. But the idea for me, I use this on the macro just to show me is the bottom in or not. So how I look at it at the monthly, again, there is not a lot of examples. So even the RSI, there is one example. Like one example here, and then, yeah, one example, second example. There's like 3 examples. So there's not enough. So this can break. There's not enough, but at least this is good probability to look at it. And I don't trade of it. So most probably when this flag the bottom, I'll be already in a trade. I'll manage my stop, put my stop at entry and wait for it. So at the stochastic, what I'm looking at, same thing as the RSI. This can keep going lower. There's nothing can go lower. Everything can go lower. Actually, when things doesn't look like it can go lower, it does go lower. This is the funny part. As the great trader William O'Neill once said, what seems to be high and risky to the majority generally goes higher, and what seems to be low and cheap generally goes lower. So let's look at this. As well, for me, a bottoming indicator is when these moving average, when the blue go above the orange. So here, another point, let's take the same bear market. So here, this was the low, this was the low, it dumped lower, the momentum still down, down, down. Here, the momentum started to shift to positive, to up. You see the blue moved above the orange. And then when the blue moved above the orange, the bottom was in already. And then this is the confirmation. Once the Heikin Ashi started green, this is the confirmation that, okay, the momentum is now shifting up. The Heikin Ashi candle on the monthly closed 2 candles up, and then you can enter here. But yes, still the same issue with these indicators. This is like 100% higher than the bottom, but at least this is more. There's more probability now that this is going higher. Buying here, you're just gambling it up. Buying here, that means at the end of the accumulation. Same thing happened here to the upside here. The blue under the orange, that was the top. You came down, accumulated. The blue moved above the orange. That means the momentum is shifting to the upside, to positive, to bullish. And after that, that was the push up. Then the momentum here shifted down. That was it. Momentum here again shifted down. So this just to show how you don't need the bottom and the low and the high to make money. So let's take this example. After this monthly, the momentum shift lower, and that's a drop of 50%. So if you sold here, you could save yourself 50%. Same thing here. Momentum shift up. Yes, you don't have to buy the 3,000, but you could have bought the 9,000, which went to 69. So these macro indicators, they help me to see the bottom. And for me, these are not saying the bottom is in, and they will not say the bottom is in, but after a couple of months after the bottom is in. So after the bottom is in, this indicator will show you that the bottom is in. It will take months for that to do. But why they are important? Because I'll be confident that, okay, the RSI now is above the moving average, that's strength. And if you see the RSI moved above the moving average at the same time where the stochastic moved above the orange. It went down. Same here. The RSI moved above the moving average. You wait 1 or 2 candles, and even this one. So you have a positive momentum and you have a bullish strength. So this means for me is a signal up, and that's on the monthly chart. And yes, it will take around a year from the bottom to show you that this was the bottom. So the main point here, there is no rush. The market will give you time. You don't have to buy $10,000 Bitcoin if it's going to 200. You can buy a $20,000 Bitcoin and still make a lot of money. This is the idea. Now the main point is what I'm doing or how I will trade this. Because I do different style of trading. I do scalping, which is, you can see my videos on TikTok and and on our YouTube, but mainly TikTok, where I try to give daily or bi-daily update in Arabic and in English. And I do scalping, I do intraday scalping, and then I do swing trades. Swing trades, which is I shorted 48, and then I added to it at the 33, I take profits, and then I do the position trading, which is investing. For my investing, this is what I do. For my investing, I was out completely on 48, because that for me was, that's it. I missed this, I'm not gonna miss it. I was out. I start going in around here. And let me show you what I was talking about in the last video, and this will not change.
You can do that, but you have to keep in mind, and this is why this analysis is important. You have to keep in mind that there is a big chance that Bitcoin will never see these numbers again until like 2 years, 3 years to come. If you're comfortable of holding Bitcoin for 2-3 years to have a new high, then go for it. If you can't afford putting this money on the side, then wait, don't. So don't invest what you can't, what you need. So you need to put money that you're thinking a couple of years from now. As we said, the new all-time high might come in September 2025. So if you're buying now, think that you have to hold these for 2 to 3 years.
So what we were talking about, and this is my strategy. Given the macro analysis, the macroeconomic analysis, I'm confident of this might work out, but I want to see more proof that this will work out. Changes in the macroeconomy, changes in the stock market. But so far, I'm nibbling. I'm buying some Bitcoin here, and I'm keeping adding down here. That's for my long term. But the most important thing is, I don't mind if this goes here, stays here, half a year, 1 year, 2 years. I don't mind that. Why? Because this is my portfolio of investing. This is not the money that I live in or I need it. This is the money that from my investing portfolio, this is the money I sold here, I'm buying here. That's for me. That's it for me. So going back to these signals, this is as if I'm buying here. Yeah, I might buy here and it can go down 20%. That's perfect. If I bought at 20, it goes down to 16, I'll add more. My average is 18. It goes down to 14, I add more. My average is 16. It goes down to 10, I add more. My average is 12. It goes down to 8, I add more. Let's say it goes to 9,000. Let's say it goes to here, to 10,000, 9,000. And my average buy is 15. That's perfect. Because if I'm looking at this as if I'm bought here, my average buy is here. So whenever this signal will signal, I will still make a lot of profit. So what's the idea here? You can either wait for that, and I'll be waiting. So the last invest I will do in Bitcoin, which is around 30 or 40% of what I'm willing to put, will happen after I see this. And why is that? Because yes, I'm trying to buy the bottom now by buying, averaging in. But even this average, even that my average now is like 20 or 19,500. If it goes to 30, I'm gonna sell part of these. So I'm swing trading them and average them. But the real money I'm gonna put in is when I see a bottom, when I see there was a bottom. So no one can tell you when the bottom is in, but indicators, lagging indicators will tell you, okay, the bottom was in. Again, it will take months till you see all-time high, years. And if the macroeconomy is working like the 60s, 70s, not the small dump, then we might see 4 or 5 months of a bear market. Then we might see Bitcoin playing between 15 and 35, 40 for like a couple of years. So I'll be playing these swings as well. So to cut it short, if you are a long-term trader, a long-term investor, you can buy on these levels, or you can simply wait for a bottoming signal and then jump in. As simple as that. So let me know your opinion. Let me know if you like this analysis. If it's too much information, I can clear something up. Appreciate your like, your follow for our page, and see you in the next long-term analysis, maybe in a couple of months or in 1-2 months. Thank you.